อีกแล้วนะครับหนึ่งหยุดคุกคามประชาชนสองหยุดสภาสามร่างรัฐธรรมนูญใหม่ขอบคุณครับพี่น้อง
Hello and welcome to Fireside Chats on Nomura Podcasts. I'm your host, Jordan Rochester from the Global Markets Research Team. And in this episode of our Fireside Chat, I'll be talking with Charnon Boonuch from the Asia Economics Team on what to make of the recent protests in Thailand and how it could feed through to the economic outlook. I'll be asking Charnon as to why the student-led protests might persist further, how this could then feed through to Thailand's economy and policy making, and of course, what this means for the Thai foreign exchange and rates markets. Now, we're currently in the middle of November, and it's worth noting the Thailand student-led protests, they've been ongoing since late February, but were at times brought by a halt, thanks to COVID-19. There have been moments of sheer defiance to the king, with protesters making their voices heard, for example, as the king and queen passed them by in their car. With a list of demands being made by the protest leaders as well. Meanwhile, we've seen and heard the chants you come to expect at any protest. The consequential drumming of police batons and water cannons blaring too. But there's also been a festival-like atmosphere at times with dancing, singing, costumes, and from what I saw, even a red carpet fashion parade. We've also heard from the King of Thailand himself on the matter in a quick interview with Channel 4 News.
We love them all the same. We love them all the same. We love them all the same.
Is there any room for compromise, sir?
Thank you. Oh, Thailand is a land of compromise.
But Charnon, I want to get a better idea as to the motivations and background to these protests. We heard a clip there of the protest leaders. I'll admit my Thai is not so good. So what triggered this wave of protests and what are their demands going forward?
Right. Thank you, Jordan. Thanks for having me today. It's a very interesting time for Thailand. We are not only in the worst economic contraction in history. Now we are facing another political protest. The tensions were escalating. What's caused it? I think I need to say that over the past 15 years, there has been a lot of street protests in Thailand. But then these protests have brought to the end by the military coup in 2014. But after the coup, it seems like the political stability has been resumed for quite some time. But the change in the constitution, which was drafted by the committee appointed by military people in 2017, may not be widely welcomed by all people in Thailand, especially young people and students, which they are the leaders of the protest this time around. We also experienced the change in the throne. The late king passed in 2016, and we have the new king. We have seen some change in the constitution related to the king as well, resulting in more power of the king in the constitution. And to these students, they are apparently not happy about the change that were brought about in the past many years since the coup in 2014. And I think they want to reverse all these changes. They want more democracy in Thailand. So that kind of leading to the street protests. I would say the tensions were started back in February when the Future Forward Party, they were quite popular to the young voters. They want reforms. They want this kind of change similar to what the protester demand. But the party was dissolved in February because of the case against their party leader. So this kind of seemingly unfair treatment to the very popular party has caused students to be unhappy about what's going on in Thailand. They want to start a protest, but because of the COVID, the lockdown, it didn't happen until July. But then the tension started to escalate very quickly in October. The number of the street protesters, went beyond, in some estimate, 100,000 of people. The reaction from the government was also quite tough. We have seen them, firing water cannons against the protesters, and this water also contains some chemical like, tear gas. So the effort to disperse the protests and followed by arresting of more protest leaders, the announcement of severe state of emergency in Bangkok were not really effective. It's actually throwing more fuel in the fire, and the protests continue on a daily basis, defying all this reaction. So we started to see the government reversing all these tough measures. They have removed the state of emergency. They have called for special parliament sessions to discuss ways to end the protests. Unfortunately, so far we haven't seen any breakthroughs from the discussion. Most MPs were not open to monarchy reforms, which is one of the key demands of the protesters. But I have to mention that this issue was unprecedented. We don't see this in the modern Thai history. It's really sensitive issue in Thailand. In addition to this, the Prime Minister also, refused to step down, which is another key demands of the protesters. The only possible concessions that the parliament were debating was around the constitutional amendments, which is the third demands of the protesters. The thing is, since then we have also not seen any major progress on that front, and it seems like the timeline is also not clear, and we could see some delay to that.
Is anything clear of this, Charnon? How it's very tough to predict how political protests can play out, but what are the possible scenarios that we're looking at here?
In our spatial report that we just published, we laid out 4 possible scenarios. In our baseline, we expect the protest to be prolonged. The tensions will continue, the protests continue to grow, and when the protests become lengthy, there's a risk of things escalating further into violence. We think it could be a rerun of the political crisis during 2013 to 14. That time, the protest lasted for 7 months and it's ended in the coup. Back then, there was no serious fatality, but I would say that because of the prolonged situation, the impact on the economy was quite clear. We think that's our base case. We assign 60% probability to this outcome, based on our view that all these 3 demands of the protesters are very difficult to meet. And so far, what we have seen from the authorities is that these demands won't be met easily or in any short period of time. Our second scenario is that there are significant concessions, and this would require the Prime Minister to step down and some clearer timeline on the constitutional amendments. But as I mentioned before, Prime Minister is not willing to resign. So we think the probability of this scenario is only 20%. The remaining two scenario is quite extreme, so we assign only 10% to each outcome. The first one is there is a sharp escalation in the tension in the short term, leading to violent crackdowns, and there will be some fatality, like what happened in 2010. But because of the softer tone from the government, we don't think that's going to happen. The last scenario is the protests is losing momentum. They fail to gain wider public support and become only noises to the economy and having no impact. And then it fades away from the scene.
Well, you've spoken about the economy there a little bit, but I want to zoom in on that. Whilst it's really hard and it's unprecedented to forecast what will happen with these protests, I'll admit, we can perhaps look at what it will mean for the economy with a bit more clarity, a bit more confidence. So, Charnon, how will the economy be impacted from these protests in your mind?
I would say, first of all, we have lowered our GDP growth forecast for next year quite substantially to 3.2% from 3.8%. The main channel that the protests will affect the economy is through the sharp decline in the tourist arrivals. We have seen that in the 2013 to 14 political crisis. The drop was also quite prolonged. I need to mention that this time, because of the COVID-19 pandemic, we still don't have any tourist arrivals in Thailand. The numbers stay close to zero. But once the economy starts to reopen the borders to tourists, we think that the protests, if prolonged in our baseline, is going to severely affect the pace of the recovery. So because Thailand is mainly, the economy is driven by tourism, we think that would, translate into a slower growth. But tourism will not be the only channel that protests will affect the economy. We also expect domestic demand to see a slower recovery as well. We see a sharp decline in both business sentiment, consumer confidence in the previous episodes of political crisis. And we think it's going to be quite similar, especially for the private investment, which we have been arguing that is quite susceptible to political uncertainty. The last channel is, once the government is more distracted from the street protests, the fiscal spending could become even weaker, slower. We have, we know the government has approved the big stimulus package under the 1 trillion baht borrowing decree, but implementation has not been really that good. If the protests continue, we think that the counter-cyclical support from the fiscal spending could also be weaker as well. So all these things, the four main channels of how the politics affect the economy, in our view, will likely play out next year.
Well, before we talk about the fiscal and monetary side, I want to just zoom in on the point you made on the borders. So tourism basically is zero right now in Thailand. If I wanted to go there, it sounds like it would be pretty difficult for me. What is the progress there? What's the timeline for Thailand on reopening the borders? Is there a date that the government have in mind to do so?
There has been no confirmation on the reopening of the border yet. So far, we only have approved the special long stay visa program for some Chinese tourists. But the number of tourists under the program is really quite low. So we don't expect that to have any impact on growth. But from next year onward, the tentative plan is that the government will open the travel arrangement with China, and tourists will not be required to go through the 14-day quarantine period. So that could help the recovery. The problem is they have not set the target date of reopening yet. They broadly said that this program should start sometime in Q1. But if you look at the implementation of the long stay visa program, it was quite slow. So I'm afraid that this travel arrangement, which could support the recovery, could also not coming as soon as we would have liked as well.
Well, we've just had, last week we had the vaccine news from Pfizer, and we've seen markets really move on the back of that. What's your view on the impact of what that vaccine could do for the Thai economy? In terms of, I guess, rollout of that would matter, but I guess that would also improve the speed to reopening the borders.
I think that's quite positive news on Thailand, especially because everyone knows Thailand is very tourism dependent, maybe one of the most dependent economies in the world when it comes to tourism. But there are a lot of uncertainty around the vaccine development. We need to see how soon the vaccine will become available, not only to the advanced economies but also the emerging markets, which will imply like how soon the tourism recovery will happen. In our view, there are a lot of uncertainty around there, but we don't expect it to happen anytime in the first half. So we still remain quite cautious on the boost from the vaccine. At the same time, I want to mention that the public concern about opening too soon is still there, and that explains why the pace of reopening the borders is not really that fast, even though Thailand is highly dependent on the tourism sectors. So all these assumptions, I think they're kind of cast doubt on how quick the tourism recovery. But especially in the short term, if the protests continue to be prolonged into the first half of next year, that means if there is any positive surprise in terms of the vaccine or the pace of reopening the borders, the impact of the political protests will still weigh on the speed of recovery.
Okay, well, we've got a good idea as to the economic impact from COVID-19 and the protests and the tourism channel as well. So let's talk about what policymakers plan to do about it. You mentioned a bit of the fiscal side earlier. What's the sort of speed of fiscal spending here? Has it slowed down despite this crisis ongoing?
I would say there are many issues around the fiscal spending even before we have the protests. We have the budget bill enactment delayed for 5 months into fiscal year 2020, and after that we have seen political infighting within the ruling party of the government coalition, and that resulted in the mass exodus of cabinet members. Most of them are technocrats. In Q3, actually, there was a resignation of 2 finance ministers, and all these things kind of affecting the implementation of fiscal support measures and also the on-budget spending, which not providing sufficient support to the economy during this difficult time. And with the protests coming in, and we think it's going to be prolonged, we suspect that the implementation could be affected even further, because the government and the parliament is now distracted by the political agenda, with the focus being shifted away from the economic matters.
Well, on the fiscal side, then it seems like there's a bit of a drag. Is the monetary policy helping out here? Do we think the Bank of Thailand will move further? Will we see more rate cuts? And if not, what are the other options on the table?
Because of our view on the politics, we actually penciling in 2 more rate cuts by the BOT. The first one, we think it will be delivered in December, and another in Q1 next year. So that would eventually take the policy rate to 0%. Our view is premised on the fact that growth is already weak because of the absence of tourist arrivals. but now it's also way further by the political crisis at the time that the fiscal spending is also disappointing. Um, we note that the BOT has been concerned about their policy space. The policy rate now is at 0.5%. So they have been focusing more on credit provisions, providing credit guarantee to help support SMEs to access financing. But with rising downside risk to growth from the political issues, we think the traditional policy rate cut is now necessary, and it's actually could complement those credit measures. So far, the BOT communication, they also not ruled out more monetary policy easing as well. They have been mentioned in the policy statement and also in the minutes that they will stand ready to do more if necessary. And all reasonable tools still remain on the table. What's important is that the new BOT governor, Mr. Setaput, in his first briefing with the media, he also suggests that the BOT is now looking into more measures to boost the recovery. He's actually referred mostly to the credit-related measures, but we think that as growth is going down, likely to disappoint the BOT expectation again, there's rising need for more easing. I also look back into the political crisis in 2013 and 14. Back then, the BOT also cut twice. Of course, the policy rate was starting at 2.5%, so there was some space there. But what we need to highlight here also is that the political issues this time started when we, are already in the worst economic contraction in history.
Well, we're talking a lot about unconventional policies these days. You mentioned there about the effective lower bound. We're pretty much nearly there in terms of the policy rate. What about this fee that's being charged on banks? Is that's something that could be cut to zero as well? So help support the credit lending channel?
Yeah, that could be the alternative to a traditional policy rate cut. But we don't think the BOT will pursue that option before cutting the policy rate. I think there is some concern about the legal constraints because these FIDF fees means that banks need to repay back the debt through the bailout fund in the aftermath of the 1997 crisis. So we do not expect the BOT to lower this FIDF fee to 0%, but we note that this is also one of the possibility that the BOT could pursue. They have done that in April. They cut this FIDF fee temporarily to 0.23% from 0.46%, and it will continue for 2 years. The bank's reaction was similar to when they did after the policy rate cut. So they actually lowered their lending rates. So it looks like the policy transmission mechanism between the traditional policy rate cut and the FIDF fee reduction was also quite similar. But because of the legal constraint that I mentioned, I believe the more likely case is the BOT will lower the policy rate first.
Well, if they're lowering policy rates, they're getting towards zero. We've mentioned the FDIF rate as well. What about the Bank of Thailand following the steps of other central banks around the world and the unconventional monetary path, negative rates or even helicopter money like Indonesia's done? Is there any possibility of that over the next year or two?
Yeah, I think we have been mentioning about the probability of the BOT moving down the UMP, unconventional monetary policy path for quite some time. But we need to understand that we think the speed that the BOT will move there will be quite slow, and they won't likely go there unless the policy rate is already reduced to 0%. The transmission mechanism of doing all this UMP, like the quantitative easing or the yield curve control, will go mainly through the capital markets. And those who will benefit from this will likely be big firms. But the BOT, we believe that they are more concerned about the SMEs and household rather than those firms. So unless they have already utilized the traditional policy space, we don't think the BOT will want to move down the uncharted waters. So it will probably take some time before the BOT moving there. And it's also, to compare BOT to Bank Indonesia is quite different, because the issue in Indonesia was because of the stability perspective, and the demand of bond in Indonesia was driven by non-resident, which is also not an issue in Thailand. So the need to go there was different from the start. And we think the BOT being conservative for quite some time, even though they have been discussing about this policy option, they haven't really elaborated further that much. So we think it's going to be a long journey before the BOT moving to unconventional measures.
Okay, so far, both the COVID-19 crisis and the protests are weighing on the economy. We've got a fiscal drag, essentially, from a lack of action in recent months. And the Bank of Thailand is considering to cut rates further and maybe consider unconventional policy, but it's not really their first port of call. Well, let's talk about how this feeds through to markets. I mean, it's been a rough 2020 for pretty much all of us, living with lockdowns on a personal basis, but also having to deal with the volatile moves we've seen in markets on a day-to-day basis as well. Now, I took a look at this morning. If I'd gone to bed on Christmas of 2019 and somehow slept throughout 2020 so far to wake up today, not only would I be quite concerned with how on earth that just happened, but Charnon, I'd also have looked at Thai baht and thought nothing happened. It's pretty much exactly where it was when I went to bed in Christmas 2019, around the 30.2 level. But that would have missed the story in between. We've had actually a significant sell-off in Thai baht going into the COVID-19 crisis. The beginning of the year, it started to weaken, but eventually at the peak of the sell-off, it was 12% weaker. And then we've had a reversal of all of that. And especially recently as well, we've had an acceleration on the back of the vaccine news. Thai baht's back to where it was towards the end of last year. Now, I remember last year there was talk about how this would impact monetary policy as well, and the central bank had to take this into account for their inflation concerns. What is the Bank of Thailand's current stance on the currency moves, and what could they do to try to ease that appreciation pressure we're seeing?
Right. I would say the appreciation in Thai baht has been, a headache for the Bank of Thailand for quite some time. And as you correctly pointed out, that now it's already back to the 2019 period, which is when we don't have the COVID-19 pandemic. So it's quite concerning, because it's definitely going to affect the pace of recovery, with the number of tourist arrivals now at zero, right? And this year it's going to come in only at 6.7 million. So that's compared to the normal year of almost 40 million tourist arrivals. Of course, there were some boosts to Thai baht. For example, the surge in gold exports, but these things is unlikely to sustain further out. So it's going to be a big policy challenge to the BOT. The problem is we don't think the BOT has much in their policy arsenal to address this concern. I think the BOT will continue to liberalize their restrictions on capital outflows. They have been doing this in the past 1 year, and they will continue to do it again to ease the pressure. But as we have seen, it's not really been effective on that front. So that's clearly put more pressure on the BOT to cut the policy rate. So it's actually support our call. We don't think the BOT will necessarily cut the policy rate just to address the Thai baht alone. But given the concerns about growth is mounting, definitely from the protests, the strengthening in Thai baht will definitely become even more important to the speed of recovery. So that's actually suggests that the BOT may need to cut the policy rates again.
Indeed, when a currency appreciates due to good news, which is the vaccines, sometimes it can offset the negative implications for inflation. It is just amazing that we're back to where we were pre-COVID in the currency there. Well, you had a conference call with investors after publishing your latest piece on the Thai protests. What sort of feedback did you get from that conference call from investors? Is there a consensus view on the currency here or rates going forward?
Right. I think for the impact on the currency, most investors either see a slight depreciation from these political issues or even a further appreciation, but that was due to the other external factors than the domestic ones. For example, weaker dollars. But the views that we find interesting is that most investors still, maintain relatively more sanguine view on the political issues, while we assign only 10% probability to the outcome in which protests lose momentum and fade in the near future. That turns out to be the base case among the investors. But the second most likely outcome, not far below this losing momentum, is actually in line with our view that the protests will be prolonged and with some risk of an escalation into violence. Now, although there are quite mixed view related to the political development, I think everyone is sharing the same view that the Thai economy is already in a bad shape. Because of the degree of reliance on tourism. And the survey also suggests that even though we have this vaccine development, the tourism recovery should only come in the second half of next year and not in the first half. So in terms of the policy response, I think this is quite interesting, is that the majority of our investors feel that there will be more rate cut by the end of Q1 next year, but the magnitude is quite different from our view. While we expect 2 rate cuts of 50 bips, the investors only expect 25 basis point in the policy rate cut.
Well, with all of that, Charnon, thank you for your time today, and with that, it's a wrap.
Oh, thanks, Jordan.
So those are the views from us, those are the trades from us, and that's the Fireside with Charnon. Thank you for listening into the podcast. If you enjoyed listening to the show or want to hear more from Nomura's economists, researchers, and investors, please like and subscribe to Nomura's podcast on Apple, Spotify, and SoundCloud, or wherever you do get your fill of podcasts. If you're feeling generous, please do leave a review on your podcast store of choice, preferably a nice one, and please do log on to nomuraconnects.com to keep up to date and keep on listening. Thanks. Goodbye for now, and stay safe.